Channeling Buffet and Biotech? Could AnaptysBio be the hidden gem in autoimmune wars? Imagine Warren Buffett trading his Nebraska farm for a lab coat, eyeing a biotech that's engineering antibodies to quiet the body's rebel immune cells. It's a far cry from his beloved insurance floats. But what if this one's got the moat-like edge, prudent stewards, and a price that screams bargain basement? Business quality and moat, engineering antibodies to restore immune peace, and AnaptysBio is no cookie-cutter pharma play. It's a clinical-stage biotech powerhouse laser-focused on autoimmune and inflammatory diseases. Sneaky culprits behind rheumatoid arthritis, ulcerative colitis, UC, and beyond, affecting 50 million Americans and gobbling up $150 billion plus in global treatments by 2030. Their model: harness a proprietary antibody discovery platform to craft best-class therapies that target overactive immune players, like PD-1 T cells, then push them through trials and snag partnerships. Think GSK for royalties and milestones, or go solo to commercialization. Revenue trickles in from collabs, $50 million in H1 2025 alone, while their crown jewel, snelimab, steals the show. APD-1 agonist, showing JAK inhibitor level efficacy in RA. Phase 2, be durable remissions off drug through 6 months, and you see enrollment done. Top-line Q for 2025. What sets them apart? Speed and smarts in antibody design, faster affinity tuning than rivals, plus a safety profile that sidesteps the nasty side effects of steroids or JAKs. It's like having a scalpel in a world of sledgehammers. But a Buffett moat? Durable like Gillette, not quite biotech barriers erode with every patent cliff, or Met2 drug from AbbVie or Regeneron. Their IP fortress platform tech, plus trial data, buys time, but waves of failures could flood it. Quality: A for innovation. Moat: B, promising but perishable. Management quality: seasoned navigators with skin in the game. Buffett's mantra: bet on the jockey, not just the horse. AnaptysBio's team feels like that credible vets who've steered ships through biotech storms without capsizing. CEO Hamir Rather, ex-Genentech. Pfizer brings immunology chops, greenlighting rosnilimab's, pivot to Phase 3 RA after stellar data. CFO Dennis Mulroy, Gilead alum, excels at capital allocation. At $75 million buyback with ammo left, and zero dilution sprees show they're treating shareholder cash like their own rainy day fund. Alignment? Insiders own approximately 6%. And no whiff of scandals, just prudent moves like extending runway to 2027 on $265 million cash. Credibility shines in partnerships GSK trust, and trial executions. Buffett would tip his hat. These aren't cowboys, they're calculated compounders, a solid. A financial strength. Revenue rockets amid cash burn blues. Biotech's a cash furnace, but Anaptys is fueling it smartly. Debt's a wrinkle. $346 million total Merck, netting tilde. $81M after $266 million cash manageable, but watch for raises. FCF TTM, $76 million burn, slowing as revenue ramps. Runway: 2 years, no immediate panic. Metric 222.5, UA change MEST. Revenue $22. 3M plus 103% tilde. $10M. 2025 EST. Net loss $38. 6M prove it in A profit margin. An A-107. 7% RON/A/a negative tilde. 200%. ROIC, NAN, 16% net DEBTN. Astable $81 MFCF, $54 million Q2. Worsening $76 million. Strengths: growth, trajectory, cash buffer. Weak spots: returns and debt. Nudge it to be Buffett's radar for turnarounds. Intrinsic value: DCF dream versus market reality. Buffett scoffs at EPS fluff. He chases owners' earnings real cash over time. With a NAB pre-profit, I modeled a DCF. Starting FCF $70 million 2025 burn. Ramping 2 positive via pipeline, 25% growth years 1 to 5. 20% years 6 to 10. terminal 5% growth on $500 million FCF. Year 10, 12% discount biotech volatility. Add $266 million cash. Subtract $346 million debt. Divide by 28.3 M shares. Crunch. Enterprise value $3.42 billion. Equity $3.34 billion. Intrinsic $118 share at $21.50 today. A whopping 450% upside margin of safety galore if rosnilimab hits. Analysts whisper $12 a CD dollars, Wedbush $45, but bear cite risks. My optimistic take bets on 20% success odds for blockbusters. Undervalued rocket fuel, long-term prospects, catalysts galore, but black swans lurk. Autoimmune's a gold rush market to $138 billion by 2033. Driven by aging pops and unmet needs in raw, you see, rosnilimab could snag 5% RA slice. $3 billion peak sales. AnaptysBio? Primed to compound 15% plus annually if Phase 3 shines, RA start H2 2025. You see, data Q4, flipping losses to $200 million plus profits by 2030. XBuzz, catalyst watch lists, hype it alongside ENTX dollar cure. But shorts, 21 days to cover and 13 F trims. ECOR1, opali dumping. Signal jitters. Risks biotech's minefield, trial flops efficacy wanes. 70% fail rate, reg delays, final verdict. A high-octane buffet stretch. But tempting Buffett's checklist does ANAB check the boxes. A. Understandable business. Yep. Taming immune chaos with smart antibodies. Follow the science. B. Consistent earnings. No volatile losses. No steady mode of profits. C. Good ROIC. Swing and miss negatives. Scream fixer-upper. D. Low debt. Half check net. $81 million bites. But cash cushions. E. Attractive valuation. Big yes $118. Intrinsic versus $21.50. Steel sit. F. Long-term moat. Conditional platform edge. But biotech's fickle. B for Buffett purists. It's not his predictable candy empire, but the pipeline pop-aligned crew and screaming discount make it a speculative value dart. If you've got the stomach for swings and a 10-year horizon, load up the autoimmune boom could make early birds rich. Your move? Dip buy or sideline? Hit reply. Let's hash it like Berkshire buddies.